Hello traders, and welcome to our another yet episode. And in this episode, I'm going to take you through the ICT Fibonacci. The previous video I did, you can go and check it. I talked about how to use the normal Fibonacci. So in your trading view, this is where you have the Fibonacci retracement. So you just check the Fibonacci, and then you have it drawn in your trading view like that. So this is the normal Fibonacci, which I taught how to trade it or how to use it in terms of getting your entries. So you can just check the previous video I did. So today I'm going to show you how to set this normal Fibonacci to what I call ICT Fibonacci. Remember, I'm an ICT trader, so I prefer using the ICT Fibonacci basically to try and get some entries. So these settings of ICT Fibonacci, they are not mine, they are derived by the author of the ICT. So I acknowledge that what I'm doing here is basically trying to show you how to set it in a very simple or very simpler manner. So once you have the normal Fibonacci like that, so what you need to do is you click anywhere along this diagonal line, then you'll see the option for settings. So once you click settings, what you need to do is now adjust this normal Fibonacci into an ICT Fibonacci. And how are we going to do that? So to be able to do that effectively, you need to start by checking, first of all, the trend. Right, this is the trend line. All right, so the trend line, so maybe we can change the color of the trend line. Let's say maybe we can have it even maybe a little bit lighter. All right, so then now we can come to, so you need to make sure that it is dotted as well for easy identification, or not, basically to make it not to look so much clustered in your chart. So then what we need to do here is on these settings that we have here, so all these other boxes needs to remain unticked like that. So the first setting that we have here is a 0, of course, always a 0. Then now we have the second box should be ticked, and now here we shall adjust to 0.618, right? 0.618. Then the third box will adjust it from 0.618 to 0.705. And then we will have this other one, we'll adjust it to 0.79, right? 0.79. And then this one will be 1, right? So this other one should be unticked. So we untick that. And this is all these others should remain as they are. Not, you don't need to tick them. So this is how you adjust. So the first box 0, the second box you tick it and you have 0.618. The third box you tick it and you have 0.705. The fourth box should read 0.79 and the fifth box should read 1. So no any other box that should be ticked below here. It should remain unticked. Then on the right side, or before we go to the right side, it's good to change the colors here. So I'll prefer using that red, right? So for the first one and also for the last one, I'll prefer using red. I'll tell you why I'm using red. So I'll tell you why. So the other ones, I'll prefer them being black, right? So these ones, I'll use them as, or maybe I can use blue because I love blue. My color is blue, all right? My color is blue. So we can have all these blue. So blue is my favorite color. So I can have them show blue, right? So then now we can come to the right side. So on the right side, we want to have the first box ticked. And here we shall have -1. All right. We shall have -1. Then here we shall have -0.62. This other one should be -0.27. right? Then these other ones should be unticked, right? They should be unticked. So as you can see, this one should be -1. The second box should be -0.62, and the third box should be -0.27. Then we can change the colors here as well to be blue. All right, we can work with the colors here to be blue so that we can be able to see this line clearly. So then on the downside, no any other box should be ticked. All right, there's no any other box that should be ticked on the downside, right? So that's how the settings look like. So we go here now and we try to adjust the background. So we remove the background, right? We remove the background. So we make it, we remove it completely. Then here we shall, this box should remain unticked. Then here for the levels, we can use values or percentage. So let's work with values this time around. Remember the previous video I showed you how to work with percentages. These other ones should remain like they are, all right? So they should remain like they are. So nothing that we need to touch there. So now what you need to do is come here and save this template, all right? So we have the template option. You click it and save it. I will call it classic ICT Fibs, right? ICT Fibs, right? Classic ICT Fibs. So you can save it in whichever way that you want to save it. So once you write there, you need to save. And then once you save, you click OK, right? So now this is the ICT Fibonacci, right? This is the ICT Fibonacci. So how do we use this ICT Fibonacci? Remember, like we said yesterday, when I was shooting this other video on how to use the normal Fibonacci, the key thing is first of all to identify the trend, right? So you need to identify the trend. So whether it's an uptrend or it's a downtrend, all right? So let's come here now. So when you look at this market has been in an uptrend, right? The market has been in an uptrend. So what you want to do, you want to look at a swing low, all right? So because it's an uptrend, you want to mark from a swing low to a swing high, all right? You want to mark from a swing low to a swing high. So this is our swing high, right? That is where we have our swing high. So we have the swing low here and we have the swing high around this particular point. So, and that is now the Fibonacci. So according to ICT, this is what ICT calls an optimal trade entry, right? So you can see when the price retraced, it came to this level of the optimal trade entry. That is between 0.618 and 0.79, all right? So this level, this means that you can take your trade anywhere between this particular level. Maybe I can shade that so that you can be able to see, and I can use different lines like that, right? So that you can be able to differentiate it from the Fibonacci lines. So this is the level that I need to be to take the trades once the price comes to retrace, right? So actually this level, right? So this is the buying zone because we're in an uptrend. So I'll wait for the price to tap into this zone, and then now we can look for a buying momentum. So what do we have in this zone? So we said yesterday, when we want to increase the probabilities for this Fibonacci, we are not just looking for a retracement level, all right, just the price coming to the retracement levels, but here we are looking at the price once it comes to these retracement levels, we want to look at points of interest that we have. So when you look around this retracement level, all right, so what we have here we have this, you can see here we have, for me, here I can see an engulfing, right? I can see an engulfing. So the price came and tapped into this engulfing, and then the price kept pushing, started pushing up. Though it consolidated in this level, remember, if you are taking a trade from here, your stop loss needs to be slightly below here. So, but finally, you saw this market push on the upside, right? So finally, you see this market push on the upside. So according to ICT Fibonacci, so 0.618 or 61.8 and 0.705 and 0.79, these are the retracement levels. So when you take your trade from these particular levels, you need to target this particular level here, the highest level where the price came from, as your first target, right? Then this can be actually, this is what Fibonacci, this is what ICT calls a scalping setup, right? Scalping profit for the scalping setup. Then here you have your first profit, take profit 1, take profit 2, and then here you have your symmetrical swing, right? Symmetrical swing according to ICT, the author of ICT, right? So let me push to a lower time frame, because when I did the normal Fibonacci video, I dwell so much on the daily time frame. So let's even try to look at the 1 hour time frame. Does it work in all these time frames? So let's see. So what we want to look basically when you're looking at this, first of all, you want to identify the trend, right? Which type of trend are we in? So once you know the trend, therefore now you can be able to position your Fibonacci accordingly, depending on the trend, right? So we have looked at the downtrend. We have looked at the uptrend. So let's try to look at an example where we have a downtrend, right? We look at an example where we have a downtrend. So on the hourly time frame, right? On the hourly time frame, what you need to do basically, I usually look at the previous day's lows and highs, all right? The previous day's lows and highs to be able to position the Fibonacci. So when you look at this particular instance, let me see where we have a very nice downtrend, all right? So when you look at this particular case here, so what do we have around this particular point? So this, once you have established this one, all right, as a trend, what you need to do is look at the swing high. So you draw from the swing high to the swing low, all right? You draw from the swing high to the swing low. So as you can see, this is the swing high, the high of this day, and this is the swing, the major swing low that we have here. Not really, yeah, it's a major swing low. But again, we can also even consider this swing, the low of the day. So we are considering the high of this day and the low of this day, right? The high of this day and the low of this day. So as you can see, the price coming back to this level, right? So this is where we have the optimal trade entry. So price comes to this particular level, and in this particular level, what we have here is a key point of interest, all right? So there we have a key point of interest, right? An order block. Okay, so the price comes and taps into that point of interest, and then you can see the price dropping. So our scalping take profit here, then take profit 1, 2, right? So you can see the price came all the way to take profit 2. So for me, basically, what I usually do, sorry about that, I can adjust it what I normally do when I'm trading this, because I trade gold mostly, so I'm contented up to this particular level, all right? Or when the price comes to this particular level, because I target like 50 pips, all right? That's my target, 50 pips, like on a daily basis. And so if you measure from this entry all the way to this take profit 1, you can see it's around 232 pips, all right? 232 pips, which is quite good, all right? Which is quite good. So So that's how you can be able to position that Fibonacci. So, but if you want to swing maybe prior to these other take profits, what you need to do is once your trade is in profit, you take partial profit and you break even, right? You take partial profit and you put your stop loss at break even. So again, you can maybe probably look at this particular scenario, a very good entry. So you can see this is the swing high, and here we have the swing low, right? The swing high, and also we have the swing low. So the price pushes up and comes to this particular level, all right? So why did the price come to this particular level? Because this level is within a key point of interest where we have this fair value gap, all right? So you can see the fair value gap. I'll be teaching about fair value gap in subsequent videos to come. So here we have a fair value gap. So you consider the bottom of this wick, the first candle here, and the bottom of this third candle, the top of this third candle here, and therefore you can see the price coming there, tapping into the fair value gap, and then now you can see the price drop coming all the way to the scalping take profit about 260 pips, right? About 260 pips. So what you need to understand also is that you will not get these setups all day in, day out, right? You will not get this setup all day in, day out. So what it happens is that maybe if you're trading like a single pair, maybe you only trade gold, you might get these setups like 2-3 times a week, right? So like 3 days in a week, right? So you'll get those setups. So if you look at this other example here, so this is a swing high, this is a swing low, all right? So this market is moving on the downside. So we have the swing high, and we have the swing low. So in this kind of a scenario, you can see the price came, but it did not touch our level. So what do you do in this particular case? For me, I don't take that trade, because what if you take this trade from here, you'll be doing what we call the fear of missing out, all right? You'll be reacting to FOMO, fear of missing out. So this kind of a scenario, I don't take. So it has to come to the key retracement levels. And also, even though it comes to the key retracement level, in those key retracement level, I have to see points of interest, like maybe order blocks, mitigation block, maybe breaker block, right? So it has to be that way so that it can be high probability, right? So this one we don't trade. So if you look again here, we have this high point, right? The swing high there, and we have the swing low here. So I can adjust that correctly, swing high and swing low. So that is our swing high, and this is our swing low. So the high and the low of that day, right? So in this particular case, you can see, of course, the price here had already created a change of character, right? So you can see the price had already established a change of character there. So once we have that change of character, what we need to look at is when the price is reversing. Now we draw our Fibonacci from the high, swing high to the swing low. So that retracement there, we look for a point of interest, all right? And from this particular retracement, where we have a point of interest is this particular order block, all right? The last buy candle that we have before the price dropping. That's where we have a point of interest, all right? That's where we have a point of interest. And from there, you can see the price now tapped into that point of interest within a key Fibonacci retracement level, and we see the price dropping. So this is where we have our scalping take profit, then take profit 1 and take profit 2, and you can see how the price respected those levels effectively. So that is ICT Fibonacci. Now you are in a point that you can be able to use both Fibonacci, the normal Fibonacci, and the ICT Fibonacci. Basically, trying to improve your trading success. So what you do, you can try and backtest the same, set those parameters that we have done to set the ICT Fibonacci. Go to your trading view, backtest, take some trades using a demonstration account, and once you start seeing positive results, then you can transition to a live account. In case of any questions, just comment. You can also like the video. You can also share the video, and I'll be looking at your comments and I'll be able to respond accordingly. So thank you so much. Until the next video, keep safe.